Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Friday, January 12th, 5:19 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in an uptrend. Check the trend gauge over here. A lot of improvement in leaders this week after the downgrade to neutral last week. So closing the week with the green arrow on leaders. Then as far as the five major indexes go across three time frames, three arrows there. The only exception being small caps closing below the 21-day moving average. Gapped above it in the morning, failed pretty quickly late morning and couldn't get back above it in an anemic afternoon rally. So the only weakness among the major indexes and the three time frames, all five of the major indexes still above our medium-term 50-day and long-term 200-day moving average. So what happened today after a hot CPI number yesterday induced volatility? A cool CPI number today. Actually, producer prices negative versus a slightly positive expectation, and that prompted a gap up at the open, but that failed pretty quickly as we approach the 4,800 level. Really, the third straight day the S&P 500 has failed into the 4,800 level, but we came off the bottom pretty quickly the first couple days of the week, so not much of a surprise and not any technical damage done. That resulted in a mixed close. Here are the numbers on the day. The Big Seven, again, dragged down by Tesla, really only down 0.2% on the day, but Tesla, 1/7 of that, down 3.7%. Gave us a negative number there. RG8 down 0.44%. Tesla impacted ARK-K, which was down 1.7%, and that dragged on the RG8. S&P 500 gapped up 0.3, was up as much as 0.5%, turned red, rallied in the afternoon just barely, up a little less than 0.1%, equal weight down 0.2. NASDAQ 100, similar action to the S&P, closed barely positive, up 0.05%, equal weight unchanged. Dow dragged down by United Healthcare, its largest component. Negative reaction to earnings, down 0.33%. Mid caps down 0.07. Russell 2000 small caps down 0.23. Pretty disappointing here after a 1.3% gap up in the morning. 60/40 stock and bond up 0.19%. In-house GROTECTION leaders took a break today. We're down 0.3% on the day. Let's get to the charts. And charts today, we're going to talk about those, a follow-up from last Friday's video, those 2023 late leaders. How are they doing in 2024? We had a big 30 stock breakdown below the 21-day last week. A lot of them recovered this week, though, bouncing at that 10-week moving average. We're going to revisit that theme today. Here's the S&P 500. As you can see, again, ran into that 4,800 on the gap up. We'll go to the 5-minute chart. You can see the gap up, the immediate fade. Tighter range versus yesterday. Also a little cup and handle-ish looking, but not as deep as yesterday. So that 4,800 level acting as resistance. Back to the NASDAQ 100, similar action. Hasn't gotten up as high as its closes in late December, but 1, 2, 3, 4, 5, 6 straight positive sessions for the NASDAQ 100, including today. Dow Jones Industrial Average, again, dragged down by United Healthcare, struggling again at that 37,800 level. Look how tight the action is there. Pulled back today. Mid caps gapped up, closed at the bottom of the range, but held the 21-day moving average. Most disappointing to us, small caps, with the big gap up and early strength, sold off hard back below the 21-day moving average. It's kind of settled down in the afternoon, but still another fail. We can't get basically one close below yesterday and back above, but a second close below today after two barely positive closes above the 21, 3 actual closes above early in the week. So disappointing close to the week for small caps. Let's go to the VIX. The VIX up 2% on the day, still below that 21-day moving average, which is where we want it. How about the dollar? Dollar went in the wrong direction as the day went along. It gapped down at the open, but then it gathered strength as the indexes got weak. So basically a mirror image on the dollar today as what we saw on the indexes. Gold stocks, we started to bomb Yemen over the weekend. That might be over Thursday night into Friday. The Houthi rebels, big gap up, faded somewhat. You can see the big gap up, but still up nicely on the day. Up 1% was GLD and gold stocks GDX, up almost 3%, still below the 200-day and the 21 and the 50-day moving average. Those acted as resistance there. How about bonds? Mixed on the bonds today. Broad bond index barely positive. TLT negative. So the long bond price pulled back, meaning the long bond yield rose a bit. As I read that intraday, the 2 and the 30-year went out of inversion. I haven't followed up on that, but we will follow up on that next week. So you can see up on the 30-year, down, up on the 30-year yield, down on the 10-year yield. That's our inter-asset correlation. Let's hit the tail of the tape. Not a lot of change in sentiment this week on the AAII. In fact, unchanged as far as bulls go. Now, NAAIM, that did tick up 9 percentage points back to 80. We don't get concerned about this unless, in fact, I need to change the background color on this. We don't really get concerned about this unless it is at or above 100. Mentioned the bombing of the Houthis, mentioned PPI. 2 days up, 3 days consolidation this week, 5 days above the 80 MA, 6 above the 21. 3 straight failures near this SPX 4800 level. That's a big hurdle that the bulls will have to get across. Uranium, big gap up today. Oils on the Middle East news also, and gold stocks on the downside. Bitcoin and Bitcoin stocks, that continues to be a sell the news event, that the Bitcoin spot ETFs. Builders and banks down. In-house, we added at the open on that opening strength to small caps, which faded, of course. We're underwater in that. And we did buy URNM, a small starter position. So slight uptick in our exposure to 2.04. Bottom line for the day, cool PPI gap up fails. Afternoon bounce brings us to a mixed close, 4,800, a big level to get across for the S&P 500. We'll see if we can do that this week. So now let's follow up. Well, show a couple charts first of all. We'll show the uranium chart. And this was on our list Monday, Tuesday, Wednesday. We didn't buy it. Obviously, hindsight wishing we would have. Somebody knew something because the volume was there early in the week. But URNM up 8.3% on the day. CCJ up 7% on the day. Those are the leaders. We got stopped out on this as it was trending below the 21-day moving average a few weeks ago, unfortunately. What other charts did I want to show? Lilly continues to be extremely strong, making higher highs, and some pullbacks, reasonable pullbacks in the rest of the things that we own today. So no real issue there. So let's go. We've got 37 charts here, and we're sorting these against the 21-day moving average, and we've also got the weekly chart over here, so you can see what the weekly looks like. How did we get to that? You can see what the weekly looks like over here, because the theme from last week was a lot of these tech leaders, and it really was limited to tech leaders, pulled back, broke the 21 in a harsh manner the first week, but at least half of them recovered this week. So it separated the wheat from the chaff, the contenders from the pretenders. You can get a nice look here at a lot of them found support at the 50-day or 10-week moving average. So keep an eye on that on the chart. You got your weekly close up here, your daily close up here, and let's go through it. So CCJ obviously back on the list from failed to back in the good graces after today's move. Shopify back above. This is what the leaders did. They sold off. They broke the 21 couple days below, and then this week or late last week started to get back above. You'll see by the time we get to the end of this list the big disparity in leadership. Shopify, here's Melly, big move today, back above. Dash, nice recovery. Uber, which we bought this week, great recovery also. And you can see the weekly just bounced at the 10-week moving average, which is very normal action for leading stocks. Wingstop up below and back above, VRT below and back above, and again, there's the 10-week showing up. That's why it's important to watch both charts and keep the 10-week as well as the 50-day moving average available. Datadog reclaiming it. This is one of the leaders from late last year. Deckers as well, holding the 10-week. Elastic. We got stopped out of this, but it did reclaim this week and survived a downgrade today to only close down 0.3%. XPO barely back above the 21-day, but still below the 10-week. Weatherford back above the 21-day, still right at the 10-week now. PSX back above the 21. Never broke the 10. GoDaddy reclaimed that key level after bouncing. IoT, same thing. GitLab, same thing. BRBR, again. Live Nation, yep, just barely though. Twilio, big gap up today on an upgrade, but reversed and closed at the bottom of its range, but another 10-week survivor and reclaimer of the 21. Mongo, kind of right on. Now this is where we're starting to get, this is kind of the dividing line between the good, and we're getting into the so-so, and then we'll get to the bad/ugly. Airbnb below, but above the 10-week. Snowflake, tough day today. It got downgraded also, survived early but sold off late, above the 10-week, sitting just below the 21. Sentinel-1, nice recovery against the 21 today. But this is kind of typical. CrowdStrike, Palo Alto, Zscaler, these have big institutional support and they held up just fine. But when the hedge funds decided to sell the leaders, this one got smacked. But now, as of today, reclaimed it nicely on 25% above average volume and just barely held above that 10-week moving average. Net hanging right on the 21 and 10-week. Live Nation. Do I get out of sync here? Airbnb, Deckers, back above. Something happened here. That's what happened. My sort got off. All right, here we go. Let's get back to where we were. Sentinel-1, Lulu. Lululemon below the 21, still above the 10-week. Tidewater below the 21, right on the 10-week. DraftKings, this broke down earlier and is below the 10-week. And look how the 10-week is starting to roll over. This gave multiple sell signals over the last couple of weeks. Duolingo trying to survive here at the 50-day moving average, but is on the weak side. Carnival Cruise Lines still above the 10-week, but can't get back above the 21. Roblox below the 21, and now the 10-week also. NXT below the 21 and right on the 10-week. Dutch Brothers looked great at the beginning. Serious selling earlier this week, just out of the blue, breaking the 10-week and the 21. UiPath, this is one that we owned, we got stopped out of, and one that can't recover the 21, but is hanging just barely at the 10-week and above the 50-day. Block/Square sitting on the 10-week, can't get back above the 21. Boeing, well, this wasn't really just pure action. There was obviously the door blowout that factored into this. SYM Symbotic, a failure, as well as Upstart Holdings. And that is it. 37 stocks, half of them survived, half of them are pretenders, probably 8 or so below the 10-week and the 21, battling at the 50-day. That's going to wrap it. And as always, like to hear from you. My email is don@revereasset.com. If you're interested in becoming a client, my partner, Dan Stewart, can be available at dan@revereasset.com, or if you call 855-REAL-WEALTH, that's 855-732-5932. Remember, it's not how much you make in the market, it's how much of that you can keep. Market is healthy, as you could tell by the trend gauge that we've got over here. The only fly in the ointment, the small cap index, that's impacting breadth. However, as it always will, if small caps are weak, breadth will be weak, but plenty of leaders still holding up. And certainly the closes of last Friday, a line in the sand for whether they're holding up and being strong, or if they're going to fade. And if they do that, I would expect that that's happening to the entire market as well. And with that, I'll wrap up this week's video for the week ending January 12th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great 3-day weekend. The markets are closed on Monday for MLK Day. Take care, everybody.